Hey guys, good evening. It is 10:08 p.m. on May 18th, 2017, 10:08 New York time, and just wanted to make a quick video. This is more an Elliott Wave video than necessarily fundamentals, but it was definitely tied to fundamentals, as I've mentioned many times, that I enter and exit based on news and fundamentals. And so I just want to make this, and we'll keep this pretty short. So what I have on the screen here is the pound Canadian, and this happens to be the 30-minute chart because it's just where I can see it the best. And I'm noting this area right in here. And this is what in Elliott Wave is called a triangle. And this is a 5-wave structure. And again, one of the things I've mentioned is that you don't really need to go in and count every little detail of every wave. The Elliott Wave purist will count individual waves within a move. I'm just looking more for shapes and patterns. So what you have here on this 30-minute chart is this triangle. Now a triangle usually precedes the last impulsive move up. So in a 5-wave impulsive move, which is the classic Elliott Wave pattern of going 5 waves, kind of like this, and then a retracement, and then a big wave 3 up, and then more of kind of a flat correction, and then a final wave up. So this is kind of your classic 5-wave pattern. Okay, it doesn't always look like this, but ideally this is what it looks like. And this is the wave, so you got 1, 2, 3, 4, 5. This is the wave 4, and these triangles usually appear in wave 4. Very rarely you'll see them in wave 2. But you will see them quite frequently in wave 4. They also can appear in wave B of a 3-wave corrective wave, but I don't want to go too far down the weeds. We're just talking about an impulsive move here, a motive wave. And so that's what we have here. Let me just get these off the screen here. Sorry about that. Okay. And now if we zoom out a little bit here, there's the 8-hour chart. Really any of these higher time frames, you can see that this pair has been in a clear uptrend. Okay, so again, when I always talk about top-down analysis, make sure that you know what's going on in the upper time frames. Even though this happens to show up really good on the 30-minute chart, I was well aware of what was going on the higher time frames. I would say the 4-hour or higher. You can see that this was in a clear uptrend, so I would not have been looking to short this pair at all anytime really in this entire area here, from really back since January. This was kind of like the post-Brexit low, and it's really been going up ever since. We did move sideways for a couple of months, but for the most part the trend's been up since then. So zooming back to the 30-minute. So this was the last piece of the correction. So we had the uptrend back here, and then the market was correcting down, and then we started to make a move back up. And this is the triangle that led to the last impulsive move up in this particular trend. And again, I said it's a 5-wave move. You can see I drew the trend line so you can really see it, and again it has the shape of a triangle. We have an A, B, C, D, E. Now most corrective moves are ABC. They're in 3 pieces. A triangle is one of the ones where it's more than 3. In fact, it's 5. So, and then each one of these legs would be made up of 3 waves. Now again, it's not necessary to identify those 3 waves. You're just looking for this shape. But I mean, I could say here this is the A, so this is ABC. Here's ABC, ABC, and somewhere in here there's a B. But whatever, it doesn't matter. I can just tell by the shape. Now, generally speaking, after the 5th wave completes, the thrust out of the triangle as a target is generally about the width of the longest part of the triangle. So that would be from here, from this high to this low, which in this case is 107 pips. So you would measure that from here, which this is the end of the triangle. This was the candle that thrust it out of the triangle. Clearly this is more than 100 pips. Okay, I mean, you can just tell by looking at it. And in fact, let's draw it out and see how many it is. It's 190, so it's almost double that. Okay, now that's fine. I mean, this is an estimate, it's a target, but it's not a hard fast rule, and as you can see, this went. Okay, now I don't know if we can see the trends of this wave. So okay, so the other thing I mentioned before about Elliott Wave is that it allows you to stay in a trend. You know, if you have the psychology to stay in it, it allows you to stay in the trend, because you are not going to get out until you see you know, signs from an Elliott Wave standpoint that the trend is over. Now you can see 5 waves in this move up. Now I move down to the 15-minute chart. This is the 10-minute. Okay, so yeah, it's not the best, but you can see 1, 2, 3, 4, 5, and generally wave 3 is the longest and the strongest. So let me label this with my Elliott Wave tool here. Okay, so now 100 pips from this low, if I had done that, I would have gotten out right here, and I would have missed literally half of this move. But the fact is that I saw that this trend was not completed. Even when it pulled back right here with this candle, I stayed in, because I didn't see 5 completed waves, and I recognized from Elliott Wave standpoint that this was the wave 3. It was impulsive, it was strong, it was much longer than wave 1, and it was going to keep going. So even once I saw this, I was not ready to exit. I knew this was going to be the final correction and then up. Okay, so, and this actually could be a little triangle right in here by the shape of it, but I'm not going to go down to a 1-minute chart and try to figure that out, so it doesn't matter. Again, I'm looking for the overall shape. I'm not looking to necessarily count waves. But it just goes to show you that with Elliott Wave, if you're following a proper trend unfolding, it will tell you when it's over, and you don't need to just exit at some random support or resistance level. Okay, you can stay with it until it gets to that point. Okay, and as far as where to get out, well, if you let's say you entered, you waited for the break. Okay, let's say you're a conservative trader and you wanted to see this go and maybe take out this high before you jumped in. Okay, that's fine. Let's say you did that, so you got in somewhere over here. Well, an Elliott Wave rule is that wave 2, which is the first corrective wave, which is probably this right here, it's not very strong, but wave 2 cannot retrace more than 100% of wave 1. Okay, that's an Elliott Wave rule. Again, I'm not going to get into all that, but my point is that it gives you a clear place where you're wrong and you should get out. So it gives you a clear place for profit, and it gives you a clear place where you get out. So you'd put your stop loss down here, because what would happen is if this price retraced more than 100%, then you're wrong and you should get out anyways. Okay, so you just put your stop loss below these lows, and this gives us plenty of room. If it wants to make a nice deep retracement up to 100%, that would be fine. Now in this case it didn't. It probably only retraced, looks like maybe 38 or maybe even 23% of this move, this first move up, because this was very strong impulsive, and this was driven by some British pound news that came out the other morning. I forget which piece it was, but you know, again, that's why I ended, because I knew the news was coming out, and so the news was positive for the pound, so the price went up pretty strong. So it really didn't retrace much. But again, put your stop loss here. You know that you got all this room to play with, and if it did happen to take out this low, then you know your interpretation was wrong. And again, you can see where it was obvious to get out. 1, 2, 3, 4, 5. Now let me just measure this wave 4 and wave up to wave 5. So this is about 64 pips, and let me measure from here to here. And I didn't do this before. Now, beautiful. One thing also to note, and this is not a hard fast rule, but it's a guide, is that wave 1 and wave 5 typically are the same length, and I just measured that. I didn't do it before. This move and this move are both 64, 65 pips. So again, as a rule of thumb, once this correction was over and you were looking for a target where to exit, then I would have, especially if I couldn't be in front of my chart to watch it, I would have placed my take profit, just to be a little conservative, maybe 60 pips off this low. And I would have given up 5 pips, but at least I would have captured 98% of the move. So again, it's an Elliott Wave guideline that gives you a specific target to look at, not a random place to exit. Okay, so that's really the purpose of it. Show you, this happens to be a triangle. You see the impulsive move. You see that wave 1 and wave 5 are the same length. You see that this move, when this retraced right here, wasn't over, because I could tell by the shape it wasn't over, and and I didn't leave all this on the table. And I knew that this stop loss was good down here, because as long as this didn't retrace more than 100%, then I was right. And the only Elliott Wave kind of guideline this didn't follow is that the width of this triangle was only half of what this ultimately did. But it's not a hard, fast rule, and you go by what the pattern shows you. And in this case, it doubled that. And that's not unusual, especially when there's news behind the move, which there was. Okay? So I hope that's clear. You can, of course, watch this again if not. And this just demonstrates the power of Elliott Wave. And this happens to be, again, a small time frame. I don't trade these low time frames, but this is where I saw the pattern. And so I'm willing to go where I see the patterns. I don't generally take trades down this low, but even on the 1 hour chart, I could tell this was a triangle, so I went down a little bit further to kind of see the individual pieces of it, and I knew that as long as these lows weren't taken out by these retracements, that this triangle was valid. Okay, so anyways, so that's that, and here it is on my live account. Whoops. Here it is, my live account. I actually was in this trade previously, and I knew this was going to go up again, but you can see where I got out. I identified this high up here. Once it broke out of the triangle, I was watching this on the smaller time frame, and I knew that this was the final move up, and so I didn't exit here. I exited up here, just a few pips shy of the high. Okay, and then you can see what happened. The market came crashing back down. So, but if I had only gotten out here, I would have left 100 pips on the table, but I got out up here, and so that's the important thing to note. Okay, and there is a clear pattern in here on the shorter time frame. Here's that same 5-wave pattern that we just saw on my demo account. Okay, right here. Okay, so anyways, so I hope that's helpful, guys. I'll just leave it there. It's just another demonstration of the combination of using the Elliott Wave patterns and combining it with the fundamentals, news releases, etc., etc. Whether you're just trading the news off the economic calendar, or whether you're trading the live breaking news, the squawk as they call it, or you're in front of your computer and you're just listening to the news squawk and you're trading off what some central bank person says, and you're taking a day trade, or like I said, for me, it's more just trading off the economic news calendar. This is the power of it, and this is what drives the currencies. But the patterns help give you an idea of where to get in, where to get out, where you're right and where you're wrong, and that's the bottom line. So, anyways, guys, I hope that helps. Leave me comments if you have any questions, and share the page, like it, and I'll talk to everybody soon. Thanks.